Here's the lowdown on inheritance tax risk for family-owned businesses and why time matters. Reliefs are tightening, and proactive planning can save millions. Start now to secure business succession and family wealth. Every conversation about legacy should start with a clear view of the inheritance tax risk for family-owned businesses, because the rules that once insulated many firms are changing fast, and the calendar matters as much as the balance sheet. The current framework lets qualifying companies and farms pass down without an inheritance tax charge. This is due to business property relief and agricultural property relief. But from April 2026, full relief is expected to be capped at £1 million, with only 50% relief on the balance. On £10 million of qualifying shares, that means £1 million relieved in full, and 50% of £9 million exposed to the 40% rate, producing a £1.8 million bill. For a family business with tight working capital, that number is not just theoretical. It can force asset sales, hinder investment, and complicate business succession at the worst possible moment. The practical question is what to do now, before HMRC applies the new limits and the window narrows. Owners are accelerating succession timetables, revisiting share structures, considering demergers, and reducing controlling stakes where appropriate. Some are gifting shares to the next generation earlier, aligning governance with a clearer estate management strategy. Others are exploring life insurance written in trust to provide liquidity for future inheritance tax, a pragmatic backstop while longer-term tax planning beds in. The trust route can still be compelling, where qualifying shares currently attract 100% relief on entry, but it needs careful modeling to avoid unintended consequences, especially if control, income rights, or future exits are on the horizon. Pensions deserve a fresh look too, as they can be powerful vehicles in a rounded estate plan, often sitting outside the estate and offering tax-efficient support to family members without destabilizing the company. The human side of this is just as important as the numbers. Clear shareholder agreements, voting rights that reflect the future leadership plan, and a documented business succession pathway reduce the chance of conflict. Wills must align with the share structure and cross-option arrangements so executors and trustees can act decisively. When everything points in the same direction, value is preserved and transition feels orderly rather than reactive. The next few months are about sequencing. Owners should map assets, debt, cash flow needs, and relief eligibility. Then prioritize actions that require lead time, such as valuations, trust establishment, lender consents, and board approvals. Accurate documentation helps demonstrate qualifying status if HMRC asks. A tidy file is often the cheapest insurance. Robust forecasts can show our future IHT bill would be funded without compromising operations, and where additional liquidity is prudent. There is no single fix, so layering strategies is sensible. Life cover for liquidity, gifts for long-term estate reduction, restructuring for relief optimization, and pension planning for resilience can coexist. Throughout, it helps to test scenarios, different valuation outcomes, partial sales, or a phased handover of control. This disciplined approach keeps options open even as legislation tightens and ensures inheritance tax risk for family-owned businesses is managed, not feared. Time is the critical variable here. With reforms landing in April 2026 and other budget changes possible, delaying until the new year compresses already tight timetables for valuations, legal drafting, and family sign-off. A calm, evidence-led plan now protects the enterprise, the people it employs, and the family's hard-won legacy. This keeps HMRC surprises to a minimum and aligns tax planning with long-term estate management. Done well, it turns the inheritance tax risk for family-owned businesses into a controllable part of a bigger, brighter succession story. If anything I've written in my blog post resonates with you and you'd like to discover more of my thoughts about inheritance tax risk for family-owned businesses, then do feel free to call me on 07434 287603 and let's see how I can help you.